What's up, Bat Fam? Welcome back to the Build a Trader YouTube channel. In this video, I'm going to be talking about how to invest and trade in a global recession. Everything I'm going to be talking about in this video is purely my own opinion, and I've come to this conclusion based on my own research, and I will share that with you guys later on in this video. However, if you guys are not aware of what's going on in the global economy right now, things are looking a bit rough, and we are definitely entering a global recession here. We've been due for one for quite some time, especially here in the US. There are all sorts of different economic indicators that have been pointing to this, but what's going on right now essentially is that inflation is running rampant all over the world. Inflation is at an all-time high in Japan, in London, Great Britain, Australia. There's war going on in Ukraine and Russia, as well as inflation, a 40-year high in the US. We have interest rates being increased all around the world, which is good for their economy to help fight inflation. However, as a result, cost of living is going up. Gas is getting more expensive. Food is getting more expensive. So as a result, people need to pull their money out of the markets. People need that cash in order to get by in their daily lives. There's also a lot of people panic selling. There's a lot of fear in the market right now, which is causing it to go down. We had a lot of people buy in at all-time highs, buying at the top, and now they're in huge losses, which is causing them to panic sell. And that's just the natural cycle of how the market works. Not only are there lots of economic signs such as inflation all around the world, as well as interest rates going up, there's also signs in the real estate market. Right now, there's a ton of people trying to buy homes. You always hear a lot of people saying, oh, renting isn't good. You know, renting is perfectly fine. There's absolutely nothing wrong with renting. With that being said, the fact that interest rates are going up is making it harder for or more expensive for people to buy homes here in the United States. As a result, they have to pay more for their mortgages because rates are going up. And I've talked to a few mortgage lenders here in the industry, and they've given me insight and what they're seeing. And what's going on is basically this. We have a lot of people buying overvalued homes. We have people buying like $600,000 homes, and it's only valued at like $450,000. And on top of that, they're paying a higher interest rate on their loans, on their mortgage rate, which in turn has them paying more for an overvalued home. Eventually, a lot of these people can't afford these homes because they're already very expensive and overvalued. You know, the market is very saturated full of buyers in the real estate industry right now. If you aren't aware of that, that's what's going on. People are swooping up homes left and right because people think that's what you need to do, buy a home right away, you know, but that's not the best thing to do. It's the same thing in the stock market. Things go up, people just want to buy in. If you take a step back and look what's really going on, these are the facts here. These homes are overvalued. People are buying homes that they can't really afford because they're so overvalued. They can afford them for now, but eventually they may go into something called forbearance. Now, forbearance is a process where people don't get foreclosed on right away and lose their homes. They're able to use forbearance for 2 years, and if they can't get out of forbearance, then their home goes to foreclosure. Once foreclosure happens, people are losing their homes. They have to sell. They're forced out of their homes, right? And that's where things are going to get scary because we're not at that stage yet. If you guys look back to what happened in 2008, obviously there was a large crash all around in the stock market as well as the real estate market. Now, I'm not trying to say things are going to crash like crazy. That's not my intention. I'm saying there's lots of signs, and there is going to be a correction in the real estate market. I'm not saying homes are going to dramatically fall in value, but they will go down. It's highly probable they will go down based on everything that I've just told you guys. But you see, this whole entire phase of a recession and recovery takes time. It's a multi-year process. It doesn't happen overnight. Just as we're entering a global recession, that didn't happen overnight. It took years for us to finally slide and transition into this phase. It got delayed a little bit because of COVID, and governments were giving people money. You know, the United States were giving people lots of stimulus checks, lots of money, which was great. But now what is happening? Inflation is a 40-year high. Interest rates are going up. Interest rates are going to keep going up. They're not coming down anytime soon. And if you think they are, then you need to do some research and really look what's going on. Interest rates are only going to keep going up, which in turn is going to hurt businesses. People are going to get laid off. Unemployment is going to get higher, and it's going to be the same exact cycle all over again like it was in 2008. Now, there have been economists predicting this for a while now. Like, I'm not claiming anything that I predicted this. That'd be absolutely insane. There have been signs for years now. Economists have been saying this for quite some time. However, it's really apparent now. It's showing itself in the market. You're seeing it in the real estate industry. You're seeing it globally. So now that you know the facts and that you know some more information, here's what you can do to take advantage of what's going on right now. After I explain some of these strategies and things that you can do, I'm going to show you on the charts exactly the things that I'm looking at and what I'm planning to do and certain levels and prices that could possibly happen, certain scenarios that we could possibly see. Essentially, in times like this, they say to, and by they I mean economists and other long-term investors and traders, they say this to buy commodities like gold and silver, and that's a hedge against inflation and what you want to do in a recession. However, you shouldn't be blindly investing into commodities such as gold and silver. You may also hear something else. They may say investments beat cash in times like this, and they're not wrong. However, sometimes you got to know when to invest, and that's what I'm going to show you on the charts. Certain areas, certain prices that may come to fruition, and those would be good buy opportunities to invest in some of these markets, such as the stock indices like the NASDAQ and the Dow Jones, as well as Bitcoin and gold and silver. But without a strategy and not knowing where to buy or what's a good area, you're blindly getting in, and that's how people are getting burned, because they're buying the dip in the stock market and they're going broke, and that's not what you want to do. You don't want to buy the dip in the stock market and then it keep going against you and you end up losing a lot of money. That's not what you're trying to do here. What I personally am doing, I'm trying to stack up some cash, some serious cash, sit on the cash, because one, your money is going to lose value in your economy, right? It won't be able to buy you as much food, your rent's going to go up, the cost of food's going up, so your buying power is less. But in the market, let's say Tesla goes down like $600. Your $600 that you have, your $600 can still buy you a $600 Tesla stock. It doesn't lose its value in terms of its investing properties as well as being able to buy stocks and investments. Your money's losing value where you live, but it can still generate you value if you invest it properly and time things right and invest at good prices. So in times like this, you want to be stacking up your cash, looking to buy things such as commodities like gold and silver, and looking for potential low risk, high return investment opportunities. While everyone's scared and panic selling, you are going to buy the lows. You and I are going to be buying the lows and riding it up over the long term, because that's what this game is about. Long-term growth. There's a lot of investors here that have been in for a while or have got in recently, and they're already in a negative return because based on where they got in. And as a result, like I already said, people are panic selling and selling off their investments. However, if you wait and plan this out, or even if you're holding still and dollar cost average in at these good prices, over these next few years, once the market and economy recovers globally, you're going to see a much larger return than you would if you bought blindly at these prices now. A big thing that traders and investors always say is to sit on your hands, and that's what you actually really need to do. Stack up your money, stack up your cash, sit on your hands until you see these good prices and investment opportunities come into fruition, and you take advantage of them when other people aren't. That's how this whole entire cycle works. All right, so I've talked enough about markets and what you could possibly do, and even brought up some real estate statistical information here for you guys. So with that being said, I'm gonna head to the charts and show you guys what I'm seeing on the NASDAQ 100, on the Dow Jones, the US 30, what I'm seeing for Bitcoin, what I'm seeing for gold and for silver, and we're gonna go from there. I will see you guys there. All right, Bat fam, here we are on the charts. We're gonna start here with US 30. So right now we are looking at the monthly time frame here. Each of these candlesticks is 1 month of data, one trading month. So what we can see for this month so far is a large bearish candle, right? And we can see that this major point of structure was broken at 3380, and you can see a large bearish push since then. We have a technical level here around the 3000 level, however, and this is where I see the market heading for now. This would be another 4% decline. But let's zoom out some here. Back to this area on the left. This is 2008 over here. This whole entire blue box represents the 2008 crash, right? So let's drag this over to where we're at now. And if you don't think this is realistic, just take a look back to the left here. Steep correction, strong bullish move a couple years ago back in 2020. Another steep correction, and then a large bullish move. It happens over and over again. Now, this is the same exact box that I just drew during the 2008 crash, during the 2008 recession. So if we were to put the same exact box where the move started, up here, we can see that there may be a stronger decline down to this level here at 26500. And you can see it's not completely there, but it's close enough and most likely will go to that point. The fact that it even lines up so close says a lot. You could also put it like this. But essentially, I'm seeing 26500 for the Dow Jones, the US 30. Some of you may be thinking, wow, that's a lot from current prices. That is a 15% decline. It's already sold off from the peak of this year down to the current prices, 15%, and 17% at the lows. So what's stopping it from dropping another 13%, another 15% or so? Nothing. And if you don't think that's possible, just look what happened back here just 2 years ago. It's definitely possible. This same exact box, same exact size of a move. So this situation is very, very realistic, and that's what you need to see. So good potential buy opportunities or areas to start dollar cost averaging or look at to start investing in the Dow Jones indices is right here. The 28500, the 26500 range. These price areas are very good compared to these highs over here. However, there is potential that it could go lower. No one really knows how strong of a recession this could be. This is a global recession, so we could see further downside compared to 2008, but we don't know that for sure. But if this area breaks right here, another 32% drop from this area down to here. We could see another steep decline like that if this area breaks. There's nothing stopping it if this point breaks. So these are two good potential buying opportunities to start investing. However, you need to keep in mind of this downside area here. If you don't think this is possible, just look to the left at previous price action. Anything's possible in the market, okay? Especially during a global recession. So keep these areas in mind. These are very good prices to buy at. No one should be buying anything right now. I'm gonna go back onto this actually. Let me zoom back in. No one should be buying any of these things right now. You should only be selling with it. The market is extremely bearish. You should not be buying the dip, like I just said. Right now is not the dip. It's not bullish. It's not going up right now. Everything is going down. You need to go with momentum. You can take sells. You can short the market. That's very possible. And you can still make money off inverse ETFs. Essentially, you're buying the US 30, but it's inverse, so you're making money off it going down instead of it going up, which is totally fine too. You just have to understand how to do that and do some research and learn these things, learn these investment properties and these practices and these assets and instruments that you can use to your advantage. But aside from that, if you're going to look for buys, look at those strong areas that I just pointed out. Those are highly probable. The risk to reward on them are huge long term once the market recovers, because the market always recovers, right? None of these companies are going anywhere in the Dow Jones. They're only going to get bigger over time, but right now they may go down. So anyways, if let's say the market recovered from right here, 26500, and it goes back to all-time highs over a few years, that's a 30% gain. That's a lot for the stock market. Cryptocurrencies and the NASDAQ and day traders can make way more, but as an investor, that's a decent gain over time. Really good. Okay, so I'm going to move on and we're going to go to the NASDAQ. The NASDAQ has already seen a tremendous decline. The highs of this year, we have seen a 29% decline, and the lows was 30% so far. The next major point we have here from the current price down to this level is another 6 to 7% decline, which is realistic because that's where the next area is. This blue box here, it represents 2008. I already have it all marked up. Right here is January 2008. So let me just move this over. January 2008 and then down to the start of 2009. So I am going to drag this box. Now this box is much smaller because the NASDAQ has grown tremendously since then, so it's not really as applicable as it was on the Dow Jones. However, you can apply the same exact zone and it's basically the same size of the current area we're at. So we can see a decline down to here from this point, and this is same with the Dow Jones because they're both coming to that same area, both coming to a similar technical level. Off this area, there could be a rebound, but I don't think it's going to be a long-term rebound like people are thinking. I don't think we're going to see this. It could be a retracement like I just drew, and then a continuation down. Or it might hop around here, these lower prices for a while, but I think we may see a lot more bearish pressure down at these levels here. And if it does fall, so from the peak down to these levels here, would be a 45 to 50% decline on the NASDAQ, and that is highly possible. It's very realistic, especially during a global recession. But this is going to impact the market a certain way that people aren't really expecting. No one is really certain what's going to happen. It is really, I guess in a sense, really volatile and unpredictable. However, if you adapt and understand what's going on, you'll be able to make money out of these current conditions. Essentially, we could see a bounce from there, recovery, or a small bounce from that low would be like a 23% gain. So that's possible, but really this price down here at 1100 is a good price for the NASDAQ for a potential buy opportunity. However, if this level breaks, like I'm illustrating the red arrow, this is a 18% drop, and from the prices that we closed at last week, be a 23% drop, 23% decline. That's very possible over time. I'm not saying any of this stuff is going to happen overnight. This is the monthly time frame. Each candlestick is a month, but over the course of the next year or a couple of years, this could happen. The market could stay bearish for a while and eventually hits one of these prices, or eventually comes down to a major low point before it bottoms out and starts to push bullish again. But some good areas I'm seeing to buy on the NASDAQ: 11000, 9000. That's really good. That's a good strong area. And down here at 757600. I know these are very low prices, and things would look very bearish at this point in time, but the whole point of investing and trading is buying low and selling high. You buy when there's fear in the market, extreme fear. Right now there's extreme fear, but it's not the right time to buy. You have to wait for the prices to come down to these areas, and they always do come to these areas. You just have to be patient and trust. And once it happens, you've been waiting, you were patient, you were sitting on your hands, you execute, you just buy it, you planned it out. And that's the whole name of the game. Another thing I'm going to look at is gold and silver. So here is gold. So where these blue boxes are represent the price movements of 2008. Right here where this blue box is on the left is price action from 2008 essentially. So I dragged this blue box over to here. And what you can see is that gold has essentially moved just as much as it did already in the 2008 recession. So with that being said, gold might have a little bit more to correct, or gold might have a strong bullish breakout. And I'm only saying this just based off the higher time frame. Right now it's kind of at an interesting area. You see it reacted off a point last week where you see this wick. It reacted off a point previous structure, which indicates that a few things could happen. Since it's right in the middle, it can go either way essentially. We could see this, or there's a potential downside move. You can see something like such. And then this breaks, and we might come down to a major point down here, down like around $1,400 an ounce before bottoming out and coming back up. These are very realistic scenarios. It depends on how this monthly candle is going to close, because you can see there's already a reaction here. If you go down to the daily time frame, there has been a reaction off this major level here. I have this on another chart, but I can draw it here. There's a major reaction off this point last week, and it turned bullish. Right here is the previous breakout point of where the market switched, or where it was consolidating and then started to trend bullish. If this were to break and this area breaks, it's just going to come down. But you could see that it held and closed with a strong bullish candle, which signals to me, one, we're going to still get this upside move like I have drawn with the arrows. But from there, it depends what happens next. A higher time frame, this daily time frame structure can break, and that would create a wick on the monthly time frame, and ultimately push that higher time frame candle, that monthly time frame candle, to bullish. So right now you can see that it's bearish. If on that daily time frame it keeps going up and it breaks a little structure point, that's going to be bullish. And if that monthly candle turns bullish, gold is going to go on a bull run essentially. And what I see is possibly gold hitting $2,200 an ounce and upwards of $2,500 an ounce. And this is based off of using Fibonacci projections, and I can show you how to do that. But now there is a downside target, like I said, at around 1400, 1355. But the bullish scenario shows this. We have our first negative 27% projection at $2,200 an ounce, and beyond that, 2450, which realistically the price makes it to $2,500 an ounce. That's why I'm saying this, because we can see these price projections lining up with the Fibonacci's, and that's a good sign. However, these downside targets line up with retracement levels as well. So if we do see a 1400 to $1,350 an ounce gold price, that's a steal of a deal to buy. That's a really low price to buy gold. Gold is not going to go to zero. Gold is only going to go up over X amount of time. It's a very valuable commodity. Gold is used in a lot of different things. And in times like these, it tends to go up after it has a steep drop. As you can see, after the 2008 correction, the market crash dramatically shot up 170%. And based off of these movements here, if it comes down to here, that's a 26% decline, which is pretty steep. However, if you were to take a buy from down here, and it does go up to these levels, that's a 60% return on your investment, as well as an 80% return on your investment if it extends up to 2,500. And say prices react from here and go bullish from this area, and you're able to invest around the price that we're at now, around $1,850, $1,900 an ounce. Not saying that it will go bullish from here, but based off what I just showed you, it's possible. But if it does go from here, that's a 20% gain, and that's a 35% gain if it goes to $2,500 an ounce. And that's a really good return on investment, especially during a global recession when everything else is going down. Okay, so keep that in mind. Gold is at a point of whether it's going to start going bullish and go on a bull run, or it could respect the current lower time frame structures and have a nice drop down to possibly the $1,400 price range. And I'm going to go to silver here, and I'm seeing the same thing for silver. Right now, this is the same monthly time frame. In 2008, I'll draw this up real quick. This was 2008 back here. You can see a pretty decent drop, right? Just like everything I've been showing. I'm going to drag this box over here. Oh, sorry. I'm going to drag this box over here. And if you do it where I just placed it, from the high of this year down to where it lines up, you can see that silver possibly has some ways to go. Okay, that is possible. We could see a pretty steep decline. And just like I said with gold, we could see a pretty steep decline with gold. It is in an area where it could go either way. It looks like it broke this level, however there's a wick. But if it holds, we're going to see the same bullish scenario like I was just saying. It should hold, go up, break structure, create a higher low, extend up to these Fibonacci's, these projection levels, negative 27% and negative 61.8%, which is $35 an ounce and $40 an ounce for silver. Let's say this is the low and I drag it like this. You can see it almost lines up with the negative 27% price at almost $35 an ounce for silver. You can see a previous resistance level here, one up here as well where price previously was, where it extended up to above $40 an ounce. The last time it came up to these highs was 2010, 2012, but based off the global economic conditions, we could definitely see this again. Now, if prices do decline, just like it did in 2008 down to here, okay, look how much it recovered on this move. Now, not saying that this is going to happen, but this was a 400% return on investment if you bought low. Okay, not saying that will happen with silver. It's possible though, anything's possible. I'm sure a lot of people didn't see this happening. I wasn't even trading back then, but I'm sure no one thought this would happen, and it did. And see, if I replicate the same thing, it almost lines up with these Fibonacci extension levels, but that's neither here nor there. I don't even trade or invest up to that far in time. Like, that's not even my strategy or anything, but I'm just trying to illustrate what's possible. That's really it. And if you just look to the left, you can see statistical data of what happened previously and what may happen now. And I'm going to drop to a lower time frame on the weekly, but where it's at is this level here. We closed as a bullish candle, but below this level. But based on how I have this arrow that I drew, we could see this next weekly candle just push bullish and start trending up, just like I was saying with gold. But if we stay below this level, then we may see a drop down to where I have this level of support at $18.50 or $19, around $18.50, around there. And if that breaks, then we could see a steeper decline where this blue box ends, which would be the same exact decrease in value as it was in 2008 at this point here. And that's all very realistic. So for silver, some good prices that you could buy for a future investment would be $19 an ounce, around $19 to $18.50 an ounce. And if it does fall, you could also buy around $15 to $16 an ounce. Those are really good low prices. And if you do buy around those prices and it does happen to go there, and let's say $19 right here, and silver goes on a bull run and breaks its high over here and goes to just say $35, that's an 81% return on investment just from buying at $19 and selling at $35. Your overall downside risk, which you don't want to be holding on to your investments forever, obviously that's foolish. And silver is never going to go to zero. It's a valuable commodity. Silver is used in a lot of different things, so it's not going to go to zero. It will hold its value over time. However, if it does go against you a lot, like it's not even that much of a decline down to these levels here where it gets really bearish, which I don't think that will happen, but that's just 35% decline, a 35% loss versus a very high risk reward. That's a 3 to 1 essentially almost. That's a very good investment just buying at $19. That's why the whole point of the game is buying low and selling high. You don't want to be buying up here. Essentially buying when there's fear in the market, but you don't want to overinvest. You want to invest what you can and trust it. It's an investment. You need to hold it. If that's what you're going to do, stick to your investment plan and strategy. If you're going to day trade it and swing trade it, then day trade it and swing trade it and manage your risk. But you got to stick to your plan and strategy if you want to make money in these type of conditions in this time. And if you aren't already currently investing, maybe start considering it. Maybe start developing an investment plan. Maybe start thinking about these type of things. You know, right now we're coming to a very different time where there's lots of potential opportunities, especially for people who've already missed out and who want to take advantage of what's going on. You know, it's not very hard to do once you understand these things and have these levels planned out and a plan. Once you have a plan, things begin to make sense. Once you have things drawn out, things begin to make sense. You begin to have an understanding of what may or may not happen. And what may or may not happen is how you choose on what you may or may not act upon. And it's that simple, guys. But this is all that I'm seeing for silver. And I'll go over Bitcoin real quick. This is the last thing, and then I'll head out and do the outro to this video. Bitcoin's very bearish right now. It just broke a major level around 30K. I've been seeing this for a while. You know, this happens a lot with Bitcoin. This is how it moves. When it first moved to $20,000 back in 2018, 2017, had a steep drop down to $3,500. There, Bitcoin almost hit 3K. And then from there, it hit all-time highs just this past year to almost $70,000, right? The same thing's happening again. We see a steep decline. There's two major points that I think Bitcoin's going to go to. Obviously, it's going to retest 20,000. It's already heading there. $20,000 Bitcoin is a steep decline. That's a cheap price. It's cheap compared to where it was. So that's not bad, but Bitcoin is really expensive. It would be $20,000, you know. Most people don't have $20,000 to buy one Bitcoin. Although you can buy pieces of Bitcoin, the real money is made being able to buy whole Bitcoins, obviously. But $20,000 is a good price if you want to start investing in Bitcoin and being a Bitcoin investor and building a crypto portfolio. Another price, if 20K breaks, which it's highly possible. You know, there's a lot of fear right now, and in the cryptocurrency market, prices tend to be over dramatic. So there may be a strong push, not maybe in one go, it could be in one go, but over time, we could definitely see a $12,000 to $10,000 Bitcoin price as well. If you don't believe that, just look over to the left here. Look at this decline, 83%. And I was in this. I was one of the people who bought up here and died. And then was like, you know what, Bitcoin's going lower. And I took sells and missed out on the bull run, all this stuff, you know, just regrets. Right, this is me though. When I first started, I was buying over here. Now, I'm telling you guys how to do this stuff and plan what's going on. But essentially, look, that same decline has already been way overextended compared to the last time, right? Way more. From the last Bitcoin, from Bitcoin's high to where we're at now is a 60% decline. So people who bought it up here, they lost a lot of money. You know, that's why you don't ever buy at the highs. You want to buy at the lows. Everyone wants to buy when it's going up, but no one wants to buy when it's going down, when things are fearful and scary. But that's where the real money is made. Now, you don't want to blindly get in this area. This is no man's land. You want to be buying down here at the $20,000 region and the 12 to 10K region. Now, we could go lower, like I was saying, with any of these investments. They could just keep going lower than those points. But these are higher probability and better prices in the long term. Buy low, sell high. It's that simple, guys. I hope you guys enjoyed the video. I did a lot of research and put a lot of thought into this. I was really trying to get this up last week for you guys before the market actually came down this past week. But there was some technical difficulties because the mic was broken and I had to wait until I got another one. But I hope you guys were able to take a lot of value out of this. Hopefully you were able to devise your own investment plan and strategy and perhaps even take advantage of some of these potential opportunities that we might be seeing come to fruition soon. With that being said, don't forget to like this video and subscribe to the channel. Don't forget to follow the Instagrams at BuildATrader at BatSignals. And if you aren't already in the Telegram channel or the Discord channel, go ahead and check the link in the descriptions. They're both there. It's free. Go ahead and join. We're a growing community. Just sticking around. I'll see you guys in the next one. Peace.